Hi everyone, welcome to the TBR Webinar series. Today, Senior Analyst Elitsa Bakalova and Research Analyst Lesiczka will be discussing revenue growth drivers and opportunities in the IT services market. Before we get started, we have a few housekeeping notes. At the bottom of your screens, you'll see a series of buttons. From left to right, you can access the slides, audio controls, Q&A, speaker bios, our survey, and social sharing. After the event, you'll receive an email with the replay link as well as a link to view other TBR webinars. If you have any questions for us, please submit them via the Q&A widget in On24. You may also reach out to us after the event at webinars@tbri.com. Thanks again for joining us, and here's Elitsa to begin the webinar.
Thank you, Sarah, and thank you for joining us today for our webinar. Before I move into all the details, just wanted to give you a brief summary of our IT services vendor benchmark. It's a quarterly report that we publish, and we have 30 vendors included in the report. The specific approach that TBR takes is that we use a vendor-centric analysis. So we build our own expertise around each vendor. We understand their financials and their business strategies, what they offer and where they perform. So when we start our assessment, we first look at the numbers. We use 15 metrics to score vendors in the report. We break revenues by service lines and by 3 geographies. And then once we have all the data, we plot the numbers and we identify the ones that are lagging and the ones that are outperforming. And then we build our, based on our expertise for the vendors, we make our assessment and our evaluation of why would they position as a leader or a laggard in the benchmark. So today we've identified 3 key topics that we want to cover in our webinar. Topic number 1 is the IT services market overview and trends. Topic number 2 is key growth drivers across service lines and geographies. And topic number 3 is vendor positioning and key vendor takeaways. Just to clarify, when we discuss data on the slides, it's related to the IT services vendor benchmark and to the information only for those 30 vendors and the segments that they were operating. So all the averages and the individual data is based on those 30 vendors. On this slide, we have a graph that shows the growth for revenues for the vendors. It's on a trailing 12-month basis. So when you look at the performance, revenue growth for the vendors accelerated in the past 2 quarters. And we have an expectations for further growth, and it's actually since we're into 2Q18 and vendors have started to report their revenues, we are confirming our estimate will be close to the mid-single digits for 2Q18 in terms of growth. And you know, it's an accelerating performance. So it's a lot better than the trend that we experienced in 2015. We saw some acceleration in 2016, and that acceleration continues now into for the first half in 2018. The vendors that have begun expanding into digital and cloud several quarters ago, and they started building their portfolios and resources, are now able to scale their transformational activities with clients and offset some of the growth pressures that we are seeing in the traditional IT services space. So there's definitely vendors that are performing well. They're growing much faster than their peers. And typically the ones that are lagging in performance are the ones that have not transformed their portfolios on time or are still finding, challenged by ongoing internal transformation and reorganization. So we see a peak in vendors acquisition activities and innovation strategies related to next generation technologies in digital and cloud. We see vendors pushing to cross-sell their new solutions around digital and cloud to existing clients. So they would approach traditional IT services clients and upgrade them to new solutions and expand wallet share so that they can build revenues in the new areas that they have invested. We also see vendors aligning talent to market demand, making sure that there's enough resources to deliver digital and cloud solutions. And we see quite a lot of activities related to building the skills internally and training on new solutions. So overall, those are just, the summary of the drivers for 1Q and 2Q18. Here on this slide, we summarize the levers. We've identified several levers for expansion in portfolio and go-to-market changes and resource management developments. On the portfolio side, acquisitions, I think, remain a key lever for quick expansion into cloud, analytics, mobility, and IoT. So, there's definitely been an increase in activities, especially for some of the vendors like Accenture, Capgemini, IBM. There's an increase in digital services acquisitions. So that's really a way to build scale and to expand into different geographies that are less covered by the vendors. But we also see some vendors wanting to go further and have something different in their portfolio. So some of them have started to identify new areas of growth that are less targeted by their competitors. And, some of those segments could be artificial intelligence, cognitive solutions, quantum technologies. Atos is one company that's been building its own IP around quantum, as well as extended reality. So the conclusion on the portfolio side is that by expanding into new areas, we expect vendors to capture net new opportunities and to continue to offset challenges in the traditional IT services area. So effectively shift their business mix and their portfolio mix from the legacy to the new areas and grow from that side. In terms of go-to-market, there's been changes in the way vendors communicate with clients. While, many years ago, and for some of the companies it still applies, they talk with the IT department of the client. Now we've seen vendors move forward and expand their relationship with the client's C-suites. So it's not only the CIO that holds the budget, but there's a CMO, there's a CFO, CEO. So they are a resource for investment into digital and cloud transformations. And we've seen more and more vendors trying to build their relationships with the C-suite from the client. This development enables vendors to improve their contract renewals and to upsell and cross-sell next generation solutions to existing clients and to expand wallet share. In summary for this go-to-market, when we're seeing that there's been a contraction in the project cycles and the sales cycles. So the digital transformation projects typically are quicker turn, they are shorter in duration. So, there's more sales activities related to adding more deals instead of, in the past where vendors had larger deals and with longer duration. So now there's more deals to work with. And so there's higher volume as well. And, pre-sales activities and sales activities are higher, and respectively the costs are getting higher for such activities. So the vendors that have established their consulting expertise, for example, IBM Services and Accenture, they're now able to use their consulting capabilities to facilitate and support sales activities and gain client trust. Another example that comes to my mind is Atos, which recently announced the acquisition of Syntel. So Atos is a company that traditionally works with client CIOs, but it realized that it needs to broaden its reach to gain access to other budget stakeholders. And the acquisition of Syntel was one way to change Atos and to reposition and to make it work, expand its reach into the client C-suite. So now work with a CMO, CTO, and CIO to get to transformational opportunities. From a resource standpoint, finding the right talent to address demand is really vital for IT services vendors. And we see the vendors selectively hire and acquire professionals, and increasingly over the past few quarters, reskilling internally and training on digital and cloud is really picking up speed because of scarce resources and increased competition for resources related to digital and cloud. Another item on the resource management side is that the delivery side. So vendors have started to transform their delivery models. So they balance onshore resources and low-cost resources. This is something that's been going on for years, and it still applies. But there's now more changes in terms of adding automation and AI-based tools to enable delivery, to improve delivery, to speed up delivery and improve quality, and to manage the cost of service side. And I think the key takeaway here on the resource management is that transforming internally on the vendor side, implementing new technologies internally and changing the delivery model, for example, through automation, enables vendors to understand the implications of digital transformation and to build their knowledge of lessons learned, and then apply those lessons learned to client scenarios, and provide them with a differentiated value proposition. On this slide, we summarize performance for the 4 service lines within the benchmark. Consulting and systems integration and applications outsourcing, or AO, they continued to grow revenues year to year, and they expanded their revenue shares. This trend has been going on for the past several quarters, and we've seen this boost in the vendors' activities in the 2 service lines, driven by IT and application modernization and the execution of digital and business transformation initiatives. Applications outsourcing has been the fastest growing service line for the past several quarters, and it was positively affected by vendors' activities around modernizing clients' enterprise applications and expanded capabilities around software partner solutions. And the key for this service line is that the goal is to address clients' business challenges through those applications. Consulting and systems integration, it's been on a growth trend for the past 10 quarters, and it's been driven by increased activities across the consulting spectrum. So business advisory, IT consulting, systems integration segments, they've been seeing a positive boost driven by digital transformation initiatives for clients. ITO was a pleasant surprise in 1Q18 because the service line returned to growth. even though it's, low single digits, but still it's a change in the trend for the service lines for the past several quarters because it was declining before. Commoditization in ITO remains, but the revenue pressures are starting to ease, and I think vendors' expansions in areas such as cloud, security services, digital workplace, network-related services are starting to offset the declines in traditional infrastructure services. BPO continues to experience revenue declines year to year, but we see the vendors constantly transform their portfolios and delivery models to increase their value propositions. For example, vendors are launching business platform as a service solutions. They're adding analytics-driven solutions and offering industry-specialized expertise to drive business transformations. From a geographic standpoint, I want to call out North America. It's the largest, the Americas include North America as the largest revenue generator in terms of share, and it remains a leading region for digital and cloud in terms of maturity and scale of adoption of such solutions. We've seen increased competition between the vendors to build their local presence to compete for work related to IT operations modernization and management, customer services, sales and marketing improvement for the client, and employee efficiency and effectiveness. Many of the vendors that have less developed reach and capabilities in North America are aggressively expanding by making acquisitions, and two companies like Atos and Capgemini come to my mind as the ones that I've seen most often buying companies to gain resources, gain client reach in North America, to diversify their revenues and to gain digital and cloud opportunities. So being present in the region is really important, and I think this competitive push will continue in the next few quarters. EMEA remains driven by two areas. So outsourcing services are still a core driver in terms of demand. So application services, business process services, infrastructure services, they're still in demand, and in continental Europe and the UK is also a driver. But the digital and cloud are really picking up speed in Europe as well. In addition to regulation-driven engagements around GDPR, for example, or regulatory technologies and financial services. So there is a mix between the two or three areas that I mentioned in terms of drivers for EMEA growth. Asia Pacific, that's the smallest and has been the smallest revenue in terms of revenue size of the three geographies. For many years now, we've seen the vendors in the past building resources, expanding headcount in Asia Pacific, but it's been used largely for global service delivery. So, providing offshore services to clients in EMEA and in the Americas. But in the past several quarters, the trends are changing, and even though vendors continue to have a large offshore bases in India, for example, or in the Philippines, they've started to change the nature of work and started to reskill their employees in Asia Pacific to increase their expertise around digital and cloud, so that they can use them for higher value offerings, and they've also started to implement automation in the mix. But there's fewer of the vendors have expanded resources for local market services to work with clients that are based in Asia Pacific. And the vendors that are pursuing revenues in Asia Pacific, they are pursuing opportunities in infrastructure development, opportunities in digitization across countries, optimization of supply chains for companies, especially in the manufacturing, as well as driving increased employee efficiency and effectiveness for clients. With this, I'd like to turn it over to Kelly to continue with the rest of the slides.
Thanks, Elitsa. This is Kelly Lesiczka, and I will be talking about, I'll start off with the vendor positioning. So a lot of the vendors have really invested in diversifying their portfolios and their skills really to build the digital and cloud capabilities. The vendors that have built out these capabilities are much better able to scale digital transformation activities with their clients, as well as begin to offset growth pressures in traditional IT service areas. For instance, those that have built out cloud and digital portfolios, they're better able to penetrate their existing client base to increase adoption of these areas to help accelerate their overall revenue growth during the quarter. As Elitsa had mentioned before, the growth is slowly accelerating. So on this slide, you can see this chart here. It shows the positioning of all of the 30 vendors in the IT services space that we cover. The size of the bubble is the revenue, and then it also shows the growth and the profitability. So as you can see, it's quite a mixed picture in terms of performance. In the top right-hand quadrant, it's occupied by vendors that have higher profitability rates, such as the India-centric vendors, as well as some of the hardware and product-centric, as well as Cisco, for instance. They're off to the side a little bit, but they are the highest profitable vendor across all 30 of them. The India-centric vendors are also up there. They're a little bit behind what they used to be, or most of them are, as they're investing in portfolio onshore areas, and their investments in automation haven't really taken off quite yet. And then if we move on a little lower, as you can see in the bottom right-hand corner, DXC, NTT Data, and WNS, they have pursued larger scale acquisitions which have really inflated their growth so far. Some of the smaller vendors such as Atos, Accenture, Cognizant, and Capgemini, they've also been acquiring to build up portfolios. The acquisitions have been smaller, more tuck-in acquisitions, so the growth is not as apparent from the acquisitions. Some of the laggards are in the bottom left. They're facing a lot of pricing and competitive pressures which are pushing them behind some of the others. They're pretty slow to transform their operating models away from those commoditized traditional areas. Some of them are very heavily BPO based, and as you could see before, BPO is still declining, so they're having trouble to shift over into these emerging areas. IBM, for instance, they're also below the revenue growth average. It's the largest company in our benchmark, and it is slow to move away from those commoditized IT services areas. It is shifting into digital enablement and cloud-based IT, but it's a very slow process as it's such a big company. It has a very large legacy business. Moving on to the next slide, we looked at the vendor landscape to identify a few of the vendor key takeaways, and you can see them in this chart here. The first key takeaway talks about the top 10, or of the top 10 vendors, the top 2, which are IBM, Services, and Accenture, they're going to continue to compete against each other and sustain their leading revenue sizes. However, the gap is beginning to close between the two as IBM and, well, Accenture is developing solutions that are building out their portfolio to emphasize those strategic areas and building out those specialized portfolio capabilities, which is building out its Accenture interactive business. They're deploying solutions and services that support omni-channel architecture deployment, which helps them gain trust among their non-traditional buyers. So starting within its client base and then slowly bringing out those more or those emerging technologies helps them to communicate with clients and really build trust so that way they can help expand their market share much quickly, which is helping them close that gap. The second takeaway is that account management and cross-selling emerging offerings to existing clients is enabling vendors to steadily gain wallet share and expand in digital and cloud. So this builds off a little bit from before. A lot of them are looking to their existing client base first to increase adoption of those emerging areas, so to shift their legacy business into the cloud and digital services and solutions. A lot of them are investing in their sales force, which helps them better communicate the portfolio messaging and really find solutions that will address the client needs to convince them to shift into these newer areas. And when they build trust within their existing base, they can slowly begin to move those technologies outside. The third takeaway is that while vendors initiate reskilling and training around digital and cloud to help them move away from those legacy areas, it does require a lot of time, change management, and internal culture adjustments to convince those legacy employees to reskill. A lot of the legacy employees are not as willing to shift into those new areas and build new knowledge and skill sets, as well as shift into completely different career paths. So some of the vendors are having trouble lowering that attrition rate to keep them, as well as integrating automation capabilities and reskilling a majority of its clients, as well as replacing a lot of them where the headcount numbers may not have changed overall. A lot of them have had very high turnover rates as some of the people are leaving and they're adding in new, which are educated in those newer technologies. The changing business models and the needs for new skill areas are really impacting the vendors as they need to curb those higher attrition rates to really keep their existing clients as well as try to promote those newer areas. And with that, I'll hand it back to Elitsa to start the Q&A.
Thank you, Kelly. Just to wrap it up quickly, the positive, the expectation of the future for IT services segment during the rest of 2018, in my opinion, is positive. We don't expect huge shifts in the performance. We don't expect, a huge ramp up in growth. Growth will likely remain in the mid-single digits for most of the companies during 2018. And, we'll keep track, we'll keep you informed of the developments in the IT services space. We still expect acquisitions, partnerships with technology vendors, and organic investment to be the three main levers. So there is quite a distribution between the three levers for growth. So that vendors expand their portfolios, they build their resources, they diversify their global reach. I personally expect some more increased interest in the Asia-Pacific region in terms of local market expansion. So we'll definitely keep an eye open and continue with our publications of the report and our special reports related to the IT services market. With this, I'd like to start taking your questions. I'll just give you a minute so that we can collect them. We have our first question. Good update, but should you not include the three hyperscalers, cloud SPs, for example, AWS, Google, and Amazon? We do have those companies covered in a different publication. We do cover them on the cloud professional services side. If you look at IT services, so our colleagues in the cloud practice, they publish quarterly reports, and we also publish a benchmark in cloud professional services. And there are webinars on the topic. So while they are, some of the vendors do partner in the IT services space, do partner with Amazon Web Services and Google, we include them in our IT services benchmark as part of ITO. But there is a dedicated webinar on cloud professional services where you would find a lot more information that's specifically targeted to the cloud service providers. Our next question, what are the main headcount trends that you observed for the vendors? And I can take that question too. I think there's 2 or 3 items that I can list. Rescaling for me has been, a common trend among the companies that I analyze on a quarterly basis, and I see a lot of this push in the IT services space, where vendors have decided to, make sure that their employees are digitally skilled, so they develop their capabilities internally. And it's also supported by the fact that on aggregate, in 1Q18, we had a flat growth in total headcount. For some of the vendors, headcount declined year to year. It wasn't, major declines, but, flat to low single-digit declines because of less hiring externally, more developing resources internally. We also see a lot of the vendors increase automation and robotization in service delivery. And this part of the delivery model transformation is making vendors hire less people, because if they add automation to some of their service level, some of the levels of the employees, and they change that, they effectively shift jobs due to automation. They use those resources that are replaced by automation to train them and reskill them, increase their capabilities, and move them up to different and higher value positions. So effectively, they shift talent internally because of automation and robotization. We've seen more vendors push to develop onshore capabilities. So have consultants, have their business, IT, and industry consulting expertise developed and established, especially in North America and also in Europe. And we've seen them more examples of vendors developing their physical digital transformation centers and collaborative facilities to develop solutions jointly with clients, jointly with alliance partners or startups, so that they provide solutions that are specifically targeted to clients' needs and to clients' industries. So being closer to the clients helps vendors understand their business needs and initiate change through next generation technologies. We have one more question. The top 3 countries with highest growth besides the USA. For the IT services benchmark, we generally have aggregate data across the vendors with 3 geographies. We haven't broken, so geographies, North America, Americas, that includes Latin America and North America, EMEA, and Asia Pacific. We haven't broken down country data for the vendors, so unfortunately I won't be able to give you the top 3 countries for highest growth. But for all the vendors, we don't have that data in the report. I cover some of the European vendors, so I can tell you that for example, for Atos and for Capgemini, North America has been one of the growth, USA, but in Europe, Germany, France are 2 leading geographies in terms of growth. And also the Nordic countries. There's been tremendous uptake in outsourcing and digital and cloud solutions in the Nordics. So those 3 in the European geography would be my top 3 growth for those vendors. We have another question come in. What types of rescaling initiatives are vendors providing? I think Kelly can address this question.
Hi, sure, Lisa. So a lot of the vendors are looking to university partners to try to provide those training programs as well as build or recruit new technologies. So they're working closely with the universities. DXC, for instance, they're pretty strategic in where they open up their new centers. So in the U.S. and Europe, they tend to put them closer to those universities so they can work with them to provide new talent as well as train their existing talents. Capgemini also, they have an internal reskilling program. They use an intensified training program to help build those skills around next generation technologies. Cognizant also announced that they have reskilled over 100,000 employees to date to build capabilities around AI, IoT, and cognitive. The training programs provide the positive impacts on utilization, but as I was talking about a little bit before, they can tend to create burnout with increasing impact attrition rates, as a lot of the employees are learning all of these new technologies. A lot of them just end up leaving because it's a lot more work, and with the increasing utilizations, it can be harder, especially with a lot of the companies that have very high company-wide turnover with a lot of newer employees.
Thank you, Kelly. Another question that we have is, what are the key client concerns vendors address during digital transformations? I think there could be several items on the list when a client starts in a digital transformation. The first item would be to understand what it means. So the vendor will be tasked to create an answer, to create a vision around the transformation. What's the goal? What will have to change to get to the goal? And the change will have to be both on the business side and on the IT environment side. So the client will have to understand what digital transformation will do to the business and how will the IT environment have to change to accommodate the transformation and drive the end result that's really been targeted. So setting up the vision is one. Then the vendor has to show in terms of portfolio and resources and convince the client that the vendor can execute the change. So the vendor will be there to make the change happen and to tie the next generation solutions such as digital and cloud into the client's existing IT environment. And then most importantly, and I think it's really underlined by vendors' activities recently, is to show the client that vendors can manage the solutions for the client. For example, manage the data, be able to extract value from the data that's generated on a daily basis at the client, to address the business needs and to use the data to make changes and to make decisions, to reach the business goals. We've seen a lot of the vendors picking up speed in terms of managed services and, especially on the managed cloud services side. So it's really something that I think is really important. So effectively taking the client from the initial vision through to executing and then managing the solution, and before that implementing, of course, is something that during that continuum, we see vendors competing to show that they have the end-to-end capability to drive clients' transformation, and that's their approach for winning clients recently. There are no more questions. So before I close, I want to thank you for joining the webinar. It's been a pleasure talking to you, and we look forward to seeing you on our next webinar. Sarah?
All right. Yep. All right, everyone, please feel free to reach out to the team or send an email to webinars@tbri.com with any follow-up questions. If you have a few moments, please fill out the survey on your screen and let us know what topics you'd like to see us cover in the future. A replay version of the webcast will be available after the event, which you will receive via email, as well as a link to view and register for other TBR webinars. Make sure to join us next Wednesday, August 15th, for IoT vendor roles. Thanks for joining, and have a great day.